It is possible to make $1,000 to $10,000 through futures trading and also lose it the same time. It is not magic. Okay, in this video, I'll be teaching you what you need to know and what you need to do to make profit trading futures in crypto, and also how you can protect your profit without having to lose it. Okay, are you excited? Let's get started. To me, I think the first thing that you need to know before trading futures is to know everything that has to do with the futures. Like, have to be familiar with the element and the component, the concept of futures trading. Okay, and when you get to a futures market platform, okay, try to understand leverage, margin, isolated by versus cross, okay, and liquidation. So all these things will help you, will put you in check. It will help you to know what to do. So in order for you to benefit maximally from this teaching, we'll be looking at what futures trading is, okay, what are the elements in the futures trading platform, how to go long or buy on futures, how to go short or sell on futures, and then we will now look at a strategy that can help you to take profit and also protect you from losing all your capital. All right, so what is futures trading? Okay, futures trading is a type of trading that can help you to make profit. Okay, to make profit regardless of the market condition. So it means whether the market is going up or the market is going down, you can make profit from the market if only you have the skill set to predict the direction of the market. If you predict that Solana will go up and it goes up, you make more, you make profit. If you predict that Solana will go down and it goes down, you make profit. Okay. For example, let's say I'm predicting that Solana will go up. I predict that Solana will go up a few days ago. You can see that it has gone up. So if you trade Solana, you are in profit now. Okay. Let's say when Solana went down, I predicted that it will go down, and I took a futures trade. By this time, I should be in profit. Okay, so that is what futures trading means. So, but let's look at what actually goes on in futures trading. Yeah, futures trading is a kind of trade where you buy. Okay, so futures are a type of financial derivative. They are used for speculating on the future price on assets such as stock, commodity, or even crypto. Traders who intend to trade futures enter into a future contract and decide the price at which they would like to buy the asset in the future. So futures trading is simply you buying a contract that at this point in time in the future, this is the amount this is the amount that the price of a coin or a token will be. Okay, then you make that prediction. Then that means if it goes in your favor, you make profit, and if it goes in the opposite direction, you make a loss. All right, so having understood this, let's now know what are the elements in the futures market? What are the concepts that you must know in the futures market? Now, I'm on Binance Exchange. I will go to when you click here, you see market, you see trade, you see futures. So let's go to futures. Under futures, you use USD futures. That means USDT will be your base currency. Okay, we are on the market, and we are on the market. Okay, so we may decide to change it, but being that we are trading Solana and USDT, so let's just make it Solana and USDT. So if you want to choose another asset, just come to this place, and you see different assets that you can trade. You see different assets that can be traded. Okay, you enter, but when you enter, so anyone you want to choose, you can choose it from here. All right. Now, so we have futures trading market. We're on futures trading market, and let's say we want to buy. Let's look at the futures here. All right. We have what we call, look at this, or we have a cross and isolated. Okay, for isolated, it means if you are allocating $10 per trade and you have a capital of $1,000, it means it is that $10 per trade that will be liquid, that will be lost should in case that the trade goes against you. Okay, but on cross, it means if you are trading perpetual mode, and if you are trading futures and the mode is cross, it means if you have $1,000, okay, on your account, on your futures account, and you are trading, you open position, it means whenever the trade goes against you, the loss will affect your entire capital. So it is always advisable to trade futures isolated mode. perpetual futures isolated mode. So this is very important. The second thing you need to know is what we call leverage. Okay, leverage simply means you borrowing. Okay, you are borrowing to increase your capital, your margin. Okay, margin is the amount the amount of money that you put into a trade per time. Okay, for example, if I'm putting $10 into a trade and I'm using a margin of 10, it means 10 times 10, it means I'm using a $100 USDT. I'm borrowing 10 times of my cap of the amount I'm using to trade per time. Okay, so what if I'm using 30x? It will be 30 times 10, which is 300. If I'm using 74, if I'm using the last 75x, it will be 75 times $10, which is okay, $750. Okay, but the consequence or the disadvantage is that the risk is also higher. So the higher the leverage, the higher the risk. So it is always advisable to stay with either 5% or 10%. Okay, like I personally I use 10% futures trade. I do 10%. All right, so this is 10%. All right. So the next thing you need to understand is what they call liquidation. Okay. The next thing to understand is liquidation. Liquidation means you are trading and once the trade is against you, it will get to a level. It will get to a level when once your margin, the amount of dollars you are using per trade is below the requirement, then the platform in this case Binance will close your trade and you lose the capital that you are using to trade. So this is why it is always good to trade on isolated and not on cross, so that if you are losing, you lose the capital you are using for each trade and not the entire capital you have. Then how to go long, how to buy. How to buy and how to go long. Long means you are predicting that the market price will increase, will go high, and because of that you are taking a long position. We call it long. So that means you are buying low and selling high. Okay, short means you are predicting that the market will go downward or downtrend and you are buying high and selling low. Okay, how do you do this? So let's just demonstrate this. So let's come to futures and as isolated as I told you. And okay, I'm opening a trade. Okay, say I want to buy let's say I'm buying I'm buying here. Okay, entry price, I'm buying here. Okay, and let's say I'm buying there, and let's say my stop loss is here. Okay, that's where my stop loss is. And let's say my profit is here. Okay, take profit is here. So let's look at how it will play out. Now I'll go there. I'll use I'm going to be using limit. Okay, limit. By now you should know what limit is. Limit, it means you are buying at when the price of that token rise to that level or drop to that level. That is the only time you are buying. Okay, so if I'm entering the trade at this will give us 67.50. I'll go and enter 67.50. Okay, 67.50, and I'm interested in putting $10 into the trade. Okay, I want to put profit and loss. Okay, because I have it on my setup. So the take profit, let's put take profit. The take profit will give us 80.21. Okay, 80.21. Okay, and the stop loss will give us 62.62, 62.62. Okay, so once everything is in order, okay, this is the price I want to buy. You confirm if it aligns. Then this is the size I want to buy, and this is the leverage. Okay, you have to choose your leverage. No. I'm interested in I'm interested in 10. I'm interested in 10. Oh, no. This 10. My leverage is already here. I've chosen my leverage before. Okay, 10. So that means I'm using $100 for this trade. So I'll click on open long. Okay, they are saying the minimum quantity is okay, the minimum quantity. Okay, let's use 20. Let's use 25. Okay, you can't trade that amount. Okay, yeah. So, but that is the idea. That is what I'm trying to say. That is the idea. Okay. Okay, we are changing from sold to gas. So let's go now and enter gas. We'll be trading gas from here. So buy. Okay, we are buying. Okay, let's go and see the levels at which we'll be buying. So we are buying here. Okay, entry price is there. Then stop loss should be here. Stop loss should be there. Then take profit should be, okay, let's say around there. Take profit. Okay, let's enter this 6.425, 6.425, 6.425. Okay, then my it's an isolated virtual margin mode is in isolated, and I'm using 10x, which is what I explained. Okay, the size is 10. The size of the trade is 10, based on which is 5% of your entire capital. So the take profit now, take profit is okay. Take profit is I'm seeing 7.014, 7.014, 7.014. Okay, and my stop loss is giving me 6.107, 6.107, 6.107. Okay, so once this is achieved, we'll open long, because we are predicting that the market will go up. So we open long. Okay, we open long. Okay, you can see I've opened I've opened long. Okay, so then how do we do it with short? Okay, let's say we are doing with short. When you are doing with short, what you need to do is to go to sell. You are open sell. So let's do the same thing. Let's now imagine that we think that the price of okay, let's imagine that the price of this will go from here. Okay, at this level we enter the entry price for short. Then we take profit here. So we take profit here, take profit, and yeah, here will be our stop loss. Okay, stop loss here, stop loss here. So this is what will happen. It means we are buying high and we're selling low. Okay, so let's say our take profit is here. Okay, so we are trading at we are entering at 7.069, 7.069, 7.069. Okay, and the size is 10. The size is 10, and okay, our take profit is 6.405, 6.405, 6.405. Yeah, 6.405. Okay, and our stop loss is 7.231, 7.231. Okay, stop loss is 7.231. Then you open short. Okay, so this is how to open long and how to open short. All right, so now that you have understood, now that you have learned how to open short and how to go long and how to go short, so the next thing to do is to know how to close it. Now that you have opened long, now we have opened long and we have opened short, how do we close it? Now, once you are trading, the next thing to know is how to close your trade. How to close your trade, how to sell. In this case, when you are you close short and you close long. Okay, I think we did long. Let's go to our long. How do we close our long? Okay, so we have okay, you can see we have okay. Now that we have bought, now if to close it, you go to you are long, you will long, then you go to close. Okay, when you go to close, you will see the trade that we took, and you see the trade is currently running. Then you see the size. Okay, do you want to close everything? Okay, do you want to close 50%? You want to close okay, 75%? You want to close 100%? Then you do it that way. Then if you want to do it that way, then you can click on close long. Okay, when you close long, if it's 100%, that means by this time you are already in profit. When you click on close long, then your trade will close. Then you check and you see your capital, your capital and trade. Okay, also you can also use limit for closing your trade. You can say, okay, once gas get to 8.50, I want to sell all. Okay, then you close long. Okay, so that's how to do it. Now, the most important step or question to ask is, how do I lock in my profit? How do I make profit trading futures? How do I prevent making $1,000 and also losing $1,000 at the same time? Okay, and that is what will bring us to this. That is the question that will bring us to the profit taking strategy. Futures trading profit taking strategy is what you need. Okay, in order for you to make profit, okay, and also be able to take profit from futures trading, you need, one, a stop loss. Okay, the stop loss that we discussed just now is very important, because once your trade is going against you, it is your stop loss that will help you to cut your losses. Okay, that is one. And two, you need to use leverage, a low level of leverage. Okay, you need to use either 5% leverage, or you need to use 10% leverage. Then the next is you should learn to DCA out and DCA out. Okay, so what I mean is this: once you are trading and you are becoming profitable, okay, you may decide to let's say you want to sell at this price. You want to sell at this price. This is your first take profit, and you can put it, write it at 7.530, 7.530, 7.530. Okay, I want to sell 50%. You can sell 50% of your 50% of your, okay, let's say we can say close. So at that level, okay, then also you can also say, aside from that, what if it get to this level and it keep rising? Okay, that's another strategy. Is to, you can have multiple, okay, take profit. Let's say at $8 you want to also take profit. Then you also come to this, you come and you click on buy, then you are closing. Then you say $8, 8.0, you want to sell the remaining amount of your holding. Okay, you close long. Okay, so what will happen is that you can see our orders. Okay, you can see our open orders here. So what will happen is that once the price of gas gets to $8, your trade will close. Okay, your profit, you will close the trade and you make the profit, your profit. Okay, you make a very good profit. All right, guys. So this is the trading course, or the trading video tutorial on futures trading. Okay, so with this futures trading guide, I believe you understand what it is and how to go about it. All right, so if you find this video helpful, kindly consider subscribing to this channel, turn on your notification, also comment and share with friends. At the top of this channel, okay, or at the top of this video, there's a video on spot trading, how to become profitable, a profitable spot trader. Kindly find on the video and watch. All right, the Coin Dollar community is the community where we give free alpha and free signals. Consider joining. Use the link on the description to join the Coin Dollar community.